Are there going to be significant increases in the supply of coal in the next 10 years? Big mining giants like BHP, etc., being offloading their coal assets. It's cheaper to burn coal than coal-fired power stations. Coal miners will play out somewhat like cigarette stocks.
Conditions for steelmaking coal. CEOs give bearish guidance is usually a pretty bad sign. Should we look into divesting from coal, or at least companies that are focused on met coal and not thermal? That's from Simon A.
Again, I think it's a case of looking in front of their noses, what happens in the next quarter or two, not where things are likely to be 2 years out or 5 years out. I don't even think they actually are willing. They can't really do that sort of thing anyway. Legally, I guess. They can give guidance maybe a couple of quarters out, but that's about it. So, again, we're always looking where things are likely to be 5 years out. And in that case, we're looking at likely demand and likely supply and the intersection of the two. Now, look at coal miners right now. Look at the valuations, not so much the actual PEs, but the forward PEs. What analysts expect the earnings to be. So you take essentially the price per share and divide what the analysts expect the earnings per share to be 12 months out. That gives you, are there going to be significant increases in the supply of coal in the next 10 years, below 5x? Then, okay, do this. Ask yourself, are there going to be significant increases in the supply of coal in the next 10 years? Now, what have we been talking about? One of the big things that's been happening is that the big mining giants like Anglo American, BHP, etc., being offloading their coal assets to smaller, less well-financed coal companies. So, the ability to actually expand production is a lot less than what it would otherwise be, because they don't have the balance sheet of the big companies. So we don't see any signs of coal, any significant increase in coal coming online. Probably more likely to be depletion of assets. Now you start thinking, okay, demand for coal. Well, it's coking coal, fine, it's steel, but it's also demand. It's also thermal coal as well. They tend to go hand in hand. What people forget about is the substitution effect for coal and natural gas. If the price of natural gas goes up significantly, guess what? It's cheaper to burn coal than coal-fired power stations, so the demand for coal picks up. So they two go hand in hand, and we think that we're going to have issues with natural gas supply, particularly coming out of the US, with what's happening with shale in the next 10 or so years. So we're not worried at all. And we're certainly not worried about what a CEO says in what's going to happen in the next quarter or two. The other thing too, also, is like often when you're at the coal face, your judgments are somewhat clouded. You can't make long-term predictions, etc. I think
I've got a chart here too, Brad. What's this about?
Yeah, all right. So we've often said that coal miners in the next, say, 15 or so years, maybe longer, coal miners will play out somewhat like cigarette stocks played out from the late or mid 1990s until, or even now. What have we got here? British American Tobacco. And what we're also saying is you've got to take into account the cumulative effect of dividends over time. People think, dividends is boring as batshit. Or tell someone that dividends are as boring as batshit if they reinvested dividends and they bought British American Tobacco in the mid-90s. The return has been some 3,000%. from 1995 until now. That's if dividends were reinvested. The actual stock price is up 600%. Now, it's not without, it doesn't go up in a straight line. Look at the next slide. Okay, so this is the actual stock price of British American Tobacco, not total return. Now, just to point out, in 1999, when the S&P went up quite a lot, I forget how much, but it was up quite a lot. You can't quite see it here, but it's down 65%. Again, stock price, not total return. Total return will be down a little bit less than that because you had dividends on top. Then, more importantly, for those who are astute out there, they will notice, oh, the S&P, it fell. It fell in from March 2000 to March 2003, it was down 45%. BATS is up 150%. And also fell some, 30-odd% in 2002. That was a real shit time. That's when the whole America Online, was it AOL? AOL? No, that was when Enron, what have you, came to full. Excuse me. So, these things don't go up a straight line. You have pullbacks along the way, but if you stand back and look at a long-term perspective, you should be fine. In fact, it's funny, Chris and I had a chat when we were going over these questions just prior to starting. So what would you own for next, if you could only make one investment, and it was on a sector, okay, not an individual stock, a sector, what would it be? And I said, well, it'd have to be a compounding dividend play. Well, what's that going to be? Anyway, what we did, the thing we came up with is probably the one best investment would be coal miners. Closely followed probably by the oil majors, Exxons and Chevrons and things like that. Who knows? All right, so keep in mind that nothing goes in a straight line.